First, we will begin by discussing subsidiary ledgers. The two most common accounts to use subsidiary ledgers for are accounts receivable and accounts payable. What we have been doing all semester is merely just writing down accounts receivable or accounts payable when someone owes us money or when we owe them money. But think of a large company like Amazon or Walmart. They may have hundreds, if not thousands, of accounts receivable customers or accounts receivable suppliers. How would they be able to distinguish among the different people and the different accounts and businesses if it's all grouped together? That's where the subsidiary ledgers come into play. We're still going to have the accounts receivable and accounts payable counts as our main controlling accounts. However, we're going to subdivide those control accounts among all the different people or businesses who owe us money or we owe money to. There are other accounts we can use subsidiary ledgers for, such as inventory, but we're really just going to be focusing on accounts receivable and accounts payable for this chapter. This is a nice visual on what subsidiary ledgers look like. For accounts receivable, we still have our main control account right here. And like I said, it's divided amongst the different customers who owe us money. So we have customer A and customer B. Throughout the month, we're going to be updating the ledger accounts of these customers. And then at the end of the month, we're going to put the total into the accounts receivable main control account. So let's say customer and A and B both owe us $100 each. So the main control account would be $200. Same thing is true for the accounts payable ledger. We have different creditors who we owe money to. We'll be putting in their balances all month long, and then at the end of the month, we'll update the main control accounts. Let's do an example together. We have three different accounts receivable accounts. These are three different people who owe us money. First, we have Aaron Co., and these subsidiary ledgers are already filled in for us. As you can see, on January 10th, Aaron Co. had owed us $6,000, so their balance was $6,000. Remember, this is a general ledger account, so every account is divided amongst itself. They're all listed individually, and we do have a balance of that account. All right, on the 19th, they paid off remember, credit to an accounts receivable account will reduce the credit. So in total, in this red color, they owe us $2,000 by the end of the month. Next, we have Brandon Inc. On the 12th, they owed us $3, so they owed us $3. On the 21st, they paid it all off, so they owe us nothing. Lastly, we have Karen Co. On the 20th, they owed us $3,000, so that's the balance. On the 29th, they paid off $1,000, so by the end of the month, they only owe us $2,000. What we need to do is at the end of the month, update the main control accounts. We have the accounts receivable control account here, and the dates are already put in. As you can see, it's January 31st because it's going to be the end of the month. Like I said, this is very simple to do. First thing you want to do besides putting in the dates is add up all the debits of all of our accounts. So all of the debits here we want to add up, and we're just going to make one entry. 6,000 plus 3,000 plus 3,000. And you add that up, that's 12,000. So we're gonna just make one entry here into the debit spot of 12,000, and then update the balance as 12,000. This is assuming there was nothing prior. That's step one. Step two would be to then add up all the credits. So here's all the credits. We have 4,000, 3,000, and 1,000. When you add that up, you get 8,000. So basically throughout the month of January, we were owed 12,000 and then paid off 8. So what's our final balance? We were only owed $4,000 by the end of the month. We can double check our work by adding up the balances of all the accounts. Aaron Co. owes us $2,000, Brandon Inc. owes us nothing, and Karen Co. owes us $2,000. When you add these up, we get 4,000, which equals our balance here of 4,000. That's how we know we did this correctly. Next, we have the classwork number 1 problem. Since you have to turn this in, make sure you have it out, and then we're doing this together. Following are the accounts receivable ledgers from Frederickson Company. Post the accounts receivable balance listed in the general ledger at month's end. So like I said here, all we have to do is update the main accounts receivable ledger account. Just as an FYI for your homework, you do have to fill in the subsidiary ledgers as well. Okay. First, it's going to be the last day of the month, right? So we're in the month of January. So what's the last day? The 31st. Good. Just like the last problem we had. So put in 131. What was the first step that we need to do? Add up all the debits. Add up all these debits, and what do you get when you add it up? When we add the 3 up, we get 8,100. So we'll put 8,100 in the debit box. And then in the balance box, we just put the 8,100. Once again, that's assuming that there's nothing prior to this. What's step 2? Add up all the credits. You have 2,000 plus 1,300 plus 1,600. You should have gotten 4,900. The balance will be the difference between the two. We were owed 8,100, but paid off 4,900. When you subtract them, we get 3,200. This is the balance of what we're owed. And once again, we do want to double check to make sure we're right by adding up all the balances. We have 2,000, 1,200, and 0. When we add the 3 up, we get 3,200. So we know we are correct. And that's it for the subsidiary ledgers. They're pretty simple to do. Like I said, for your homework, you might have to fill in these as well, but it's still not something that's too difficult to do. Also, we were dealing with the accounts receivable ledgers here. Accounts receivable does have a debit balance. Say we were doing accounts payable has a credit balance. So instead of doing the debit first, you would be doing the credit first, and then you'd be offsetting your debt with the debit. So it would kind of be backwards here because we're looking at a different account. So I just wanted to make sure you were all aware of that.